Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, November 3rd, 2025, and here is everything you need to know as the markets close for today. After a two-day losing streak, Indian equities staged a minor recovery today, marking a cautious but positive start to November. The Nifty 50 closed at 25,763, up 41 points or a modest 0.16%. The Sensex rose 40 points or 0.05% to close at 83,978. While the headline indices showed marginal gains, banking stocks led the charge. The Nifty Bank surged 325 points or 0.56%, finishing at 58,100. Broader market indices also participated in the rally, with the Nifty Midcap 100 up 0.77% and the Nifty Smallcap 100 up 0.72%. The rupee maintained relative stability, trading around 88.36 against the US dollar, as per the latest available data. The day was marked by volatility early on, with indices starting weak but recovering significantly by the close, a pattern that suggests selective buying interest in specific sectors as opposed to broad-based enthusiasm across the board. On the positive side, Shriram Finance was the standout winner, soaring 6.18%, driven by strong financial metrics and sector momentum. Tata Consumer Products rose 2.62%, while Apollo Hospitals climbed 2%, buoyed by healthcare sector optimism. Mahindra and Tata Motors passenger vehicles also posted gains of 1.89% and 1.8% respectively. On the flip side, Maruti Suzuki was the biggest laggard, sliding 3.4%, weighed down by automotive sector concerns and market consolidation. ITC fell notably, followed by TCS, L&T, and JSW Steel as profit booking dominated large-cap IT and industrial stocks. BEL also posted losses, reflecting weakness in select defense and IT segments. For the Nifty 50 today, key resistance near the 25,800 mark held firm, preventing a decisive breakout to the upside. Support levels at 25,750 held as expected, providing a floor for intraday traders. The index tested these levels multiple times during the session, but recovered each time, signaling steady demand at lower prices. The formation of support at 25,753 remains critical for tomorrow's session. For Bank Nifty, the 58,000 psychological level acted as a meaningful resistance throughout the day. The index managed to hold above 57,750 support, ending just above 58,100, a positive signal that the banking rally has further room to run if this level sustains. Realty emerged as today's strongest performer, gaining 2.23%, supported by infrastructure development optimism and strong urban demand. PSU banks led the financial sector rally, surging 1.92%, buoyed by improved non-performing asset ratios and government support measures. The pharma sector also participated, rising 1.2%, reflecting steady consumer healthcare demand and overseas order flow. On the weaker end, consumer durables fell 0.29%, IT declined 0.17%, and FMCG dropped 0.1%. Sectors that saw profit-taking after recent gains and faced headwinds from softening domestic consumption signals. India's manufacturing momentum remained robust, with the HSBC manufacturing PMI accelerating to 59.2 in October, up from 57.7 in September. This expansion signals strong factory activity, with new orders expanding sharply supported by healthy demand, advertising efforts, and optimism around GST reform. The solid PMI reading reinforces confidence in India's economic fundamentals heading into the final quarter of the fiscal year. Export orders grew, though at a slower pace than domestic demand, underscoring the strength of the domestic market. On the regulatory front, the Ambuja Cement Q2 results announced today showed a spectacular net profit surge of 268%, providing positive sentiment to the materials sector and reinforcing the strength of India's infrastructure and construction narrative. In the commodity space, MCX gold traded higher at around 1,21,784 rupees per 10 grams, reflecting softer dollar conditions and healthy spot demand globally. MCX silver also surged, trading near 1,49,000 rupees per kilogram. Both precious metals benefiting from slight safe haven demand and easing US dollar strength. Crude oil futures on the MCX moved up by 32 rupees or 0.59% to 5,454 rupees per barrel, as participants increased positions on firm spot demand and OPEC Plus production decisions. Globally, WTI crude climbed 0.64% to $61.37 per barrel, providing a tailwind to energy stocks on the Indian bourses. Global markets started the week on a positive note, with Asian indices showing broad-based strength. South Korea's Kospi surged 2.78% to close at 4,221, while Hong Kong's Hang Seng rose 0.97% to 26,158. These regional gains provided a supportive backdrop for Indian equities today, bolstering investor risk appetite and encouraging selective buying across key sectors. Looking ahead to tomorrow's session, the Nifty 50 faces immediate resistance at the 25,900 mark. If this level breaks decisively, we could see a move toward 26,000 levels. On the support side, 25,700 is critical. A sustained break below this could accelerate selling toward 25,600. For Bank Nifty, tomorrow is pivotal. The 58,000 level is the make or break zone. A decisive close above this could open the doors to 58,300 and 58,500. Conversely, weakness below 57,800 could drag the index back toward 57,500. The overall structure suggests consolidation with a slight positive bias, though volatility is likely to persist given mixed global signals and ongoing corporate earnings announcements. Here's your takeaway for tomorrow. The recovery in PSU banks and realty stocks today suggests the market is finding its footing after last month's weakness. If you're a trader, using today's close as a reference, look for a test of support levels early tomorrow before making fresh bets. For investors, selective positioning in banking and realty sectors on any dips could present medium-term opportunities, especially given government focus on infrastructure and financial sector health. Remember, earnings season is in full flow. Keep a close eye on Q2 results from companies scheduled to report. Your stock picking will depend heavily on individual company earnings surprises, not just index-level movements. Stay tuned for tomorrow morning's wrap and send in your questions and market observations. We'd love to hear what's on your radar. Until next time, keep your portfolios in check and stay informed. Goodbye.